Yeah, so I believe in making communities better. I take great pride when we fix up a community, we do things, we do special resident events. My goal always was that people that lived in our apartments referred to it as their home. And that's a lofty goal for someone in an apartment to say it's my home. And to me, anytime I feel I do that, it's just a big win.
Welcome to the Build It to Billions podcast, where we guide successful entrepreneurs and investors on their journey from millions to billions. We believe that the key to scaling your business and compounding your wealth starts every day with the mindset of stewardship over ownership and applying billionaire principles. Our ultimate goal is to help you scale and compound your wealth and impact so you can give more, or all of it away. I'm your host today, Brett Swartz, and every episode we feature some of the world's top entrepreneurs, millionaires, and billionaires. They share their principles, values, and secrets and wisdom, providing each of us with the insights we need to reach the next level of success and impact. I'm excited about our next guest. He's out of the great state of Texas. He is the VP of Investor Engagement at Massive Capital, and he's here to share with us some wisdom when it comes to helping people create financial independence through multifamily investing. He has tons of experience in this, and we're going to be talking about it today. Please welcome to with me, Trevor Thompson. Mr. Trevor Thompson, how are we doing?
I'm doing great. I'm excited to be here. Thanks for having me.
Absolutely. And for our listeners getting to know you for the first time, would you give us a little bit more about your story and your current focus?
Yeah, so I'm originally from Niagara Falls, Canada. I have an interesting background in the entertainment business. Started with Ripley's, believe it or not, at age 13. Then I did 18 years with Guinness World Records. Moved down to Orlando to open a Guinness, but that fell through. So strangely enough, I opened a year-round haunted house. And then my next adventure was 20 years with iFly Indoor Skydiving. I actually opened 46 of 80 locations all over the world. I always knew I should be interested in real estate investing, but I was terrified of toilets, tenants, and trash, so I didn't really want to go the single family route. And then one day I found out about apartment syndicating, and I was hooked. It was just an amazing model for me to take my financial freedom to the next level.
Excellent. And, Trevor Thompson, before we dive into all of that, I want to go one other step back. I believe we've all been given certain gifts, and the gifts have been given to us to be a blessing and help to others. People call them strengths, superpowers. I'm curious if you had one or two strengths or superpowers, gifts, what do you believe they are, and how does that help how you help and bless people today?
Yeah, so mine is definitely connecting with people. I'm one of those guys that will go anywhere and find the odd duck in the room that's kind of sitting back and being quiet and making sure to bring them out. And I've always found them to actually be some of my strongest connections in life. But they're just a little nervous at a new event or whatever. And so I love that. That's why my title's Investor Engagement, because I love engaging with people. So, and then my next passion is to make sure people understand about passive investing. I spent my whole life going around the Monopoly board. Many of us do. But we don't think of what we need to do is actually, instead of us trading time for money, we need to put our money to work. And that's kind of been my later in life lesson that every opportunity I share it wherever I can.
Absolutely. Great. Sounds really great. We're going to dive right into that right now. And so that is going to be the topic today, is how to build massive passive income, and really successful passive investing. So, Trevor Thompson, what's the number one secret to doing just that?
So I always like to quote Warren Buffett: until you find a way to make money while you sleep, you will work until you die. So it's a very simple thing, right? That you work, you earn money. Many people tell us to save or to do different things. And what I like to teach is you need to invest that money to where that money is working for you. And when you're investing in apartment syndications, number one, you're using the compounding power of debt leverage. And then you also have all kinds of tax benefits through depreciation and other things. Real estate is the most tax efficient way to invest in anything. 90% of all millionaires became so through real estate. It's quite interesting that a lot of people don't necessarily talk about it or do it. but it is definitely a way to really, really have your money grow.
Excellent. So it sounds like the number one way is to understand that the compounding wealth through debt, leverage, and multifamily investing
Yes.
is to be a passive investor. And I like that quote. Yeah. I mean, you'll work until you die unless you learn how to make money while you sleep, by Warren Buffett. That makes sense. So, what's the number two secret to massively building passive income?
Yeah, so it's actually finding out what your risk tolerance coverage is. So you want to do some due diligence, you want to learn a little bit more about doing it. And then the next thing, I think who you give your money to is more important than where you put your money. So find people. It's a big difference, right? When you invest in Apple or Microsoft, you don't know anybody. You just trust, hey, they're a big company and they're going to play nice or do different things. When you're giving monies to smaller groups, to real estate investing, you want to make sure that the who is who you're giving your money to is very important. You want to make sure that the values are aligned. So it's really quite interesting, right? We have a housing shortage in America. If you can take an apartment complex, make it nicer, safer, cleaner, improve the value. Yes, you will increase the rent some, but you're still providing quality housing and make money. To me, it's just kind of like it's a home run trifecta because so many people get touched by what you're doing.
Excellent. Okay, those are two good points. So, who you give the money to when it's more of a private, private equity or private multifamily syndication or fund is
Yes,
more important than the than what you're investing
that's
into.
correct. I believe
Although, of
that.
course,
Yeah.
what you're investing is important. You want to make sure you have
Yes.
tax advantages and have cash flow that makes sense, and the demographics and the job growth and all of the different things that go into that, and the housing crisis and the shortage and all of those things. Compared to like maybe you're used to if it's like an Apple or Home Depot or
Yeah.
Walmart or Costco, that's a big public company. You don't know the who behind that. I mean, you
Yeah.
might know of Steve Jobs back, before he passed, or you might know of Tim Cook today, but you're trusting the overall company. Is that for something on that next point?
Yeah, it's really, really strong. And what a lot of people don't understand too is when you invest in something. Okay, so let me just use simple example. You buy a $10 million apartment complex, you put $7 million worth of debt. You still have to raise a little bit of money to make the deal work. So you may raise 12, let's say you raise $12 million. That means the investors have paid $5 million into the deal. But what a lot of people don't realize is now the investors own 70% of the real estate asset. The sponsorship team, like the group I work with and other groups, we own 30% of it. So if you think about it, you can put your $50,000, you're part of an ownership group that owns 70% of a $10 million asset that you're hoping in 5 years you can sell it for 15 million. That would allow you to double your $50,000 in one of the most tax efficient ways. It's just the power of it is people just don't know enough about it. And to think that a lot of people think, oh, I can't buy a multi-million-dollar apartment complex. But when you think of it, they're the majority shareholders. They're the ones that own it. It's quite interesting.
Yeah, I think that I'm going to bring that math together. I'm sure everyone heard that. So you put $50,000 down, let's say on a $10 million asset, and let's say it's a 70-30 split with 70% to the investor, 30% to the sponsors. And if the value of it went to 15 million over, let's say 5 years,
Yeah.
that 50 turns into $100,000.
Yeah.
Plus you have all those tax advantages along the way. Is that a fair summary?
That's exactly right. Yeah, and so it's pretty amazing that your money can grow like that. And again, someone else is doing all the work. You are a total passive investor. You are not responsible for getting any other bank loans or doing any of the work. It's when I found out about syndications. I mean, I'm involved in 31 now in 5.5 years. So I've obviously a big believer, jumped in, and it's just a powerful way to grow your wealth. And then the next level I like to talk about is to start early as you can and then to keep investing. So we've talked about turning 50 to 100. Let's invest the 100 for 5 more years and turn it into two. Invest the 200 and turn it into four. Invest the 400 and turn it into eight. Invest the 800 and turn it into 1.6. Invest that to $3.2 million. Who in this world would not have their life changed by making one initial investment, assuming you double, assuming you have no tax implications, and your family now has $3.2 million worth of net worth value. That's life altering. That doesn't happen in any other investment vehicle.
Yeah, and we're talking here with Trevor Thompson, and you can learn more about everything he's doing by going to massive.capital, massive.capital. And massive.capital is a multifamily investment company that you can invest if you're an accredited investor. I imagine that's the main way to do that. Yeah, so the power of compounding interest makes a whole lot of sense to me and our listeners. You mentioned a key part there, assuming that you're not paying all the tax, right?
Yeah.
And because when you do get out, there are taxes, right? And we're seeing, and assuming too that the deals made sense, he made money. There are people that have overpaid over the last few years, and prices were highly appreciated, especially in multifamily syndications. And these interest rates are expired or expiring. Debt is through the roof, and they're taking on all of the floodwaters on the boat, and the boat might sink. I'm curious, what are your thoughts on today's marketplace, and how is Massive Capital doing given the circumstances with a lot of these rate caps expiring?
Yeah, so it's quite interesting that even though there is distress, when you actually look at the multifamily business all across America, only 4% of the deals have any sort of distress at this level. But there are ones out there, and there are ones that are about to become in distress. So we actually think the next 18 months is the biggest buying opportunity since the 2008 crash. This may even be a better buying opportunity because that was more in the single family space. And, this is something that's going to be amazing for the commercial real estate space, multifamily, other things. We actually think this is going to create a very good buying environment. I mean, I know the last deal we bought, we paid 30% less than their asking price. It took us a while to get there, almost 9 months of back and forth. A couple other folks tried to buy it, but buying it right is super important, and your debt is super important. So there are some debts that are assumable that are fixed. So we've been doing those. And then we do believe it's going to take about 2.5 years before interest rates will normalize. And when I say normalize, things in the 5.5% are normal. When we were at the 2, 3, that's not normal. You look at the last 50 years of debt in America, that's not normal. So what really messed this up is what I call the hockey stick of interest rate rises. Like it dropped down to very unreasonable and then shot up above reasonable.
Okay, got it. So it sounds like, from your estimations or from your stats, 4% of the deals have distress in commercial real estate, and yet there's going to be some more coming in the next 18 months. And that's the key. Yes, that makes sense to me. Do you? Let's talk a little bit about taxes itself, right? So part of what we do here also is capital gains tax solutions for those that are feeling trapped by the 1031 exchange, where they might be selling a business or they might be selling crypto or stock that doesn't qualify for 1031, or they might were selling assets and they had these large gains, and so now they're overpaying for properties because they're in this short little time window, right? Feeling that pressure. So I'm curious, Trevor, what's your feeling for the 1031 exchange? What's the biggest frustration? What do you like? What don't you like about the 1031 exchange?
Yeah, so I've not used it personally, but it is part of my lifelong plan. My lifelong plan is to amass some assets. Then I'm going to put them into land, in a 1031, put that into a family trust. Then so I'll avoid taxes then. And then what a lot of people don't know is you can actually avoid taxes when you do it that way on a 1031 into a land, and then you die. You actually can avoid the taxes, and your family trust can inherit it at the new stepped up value. Again, I'm not a tax accountant, but that's amazing if you think about it, right? So often we're kicking the tax ball just down the road till we're hopefully in a favorable tax situation. But if you actually can put some family and estate planning into there, it could be a very powerful way. And again, that's how a lot of our lot of our multi-billionaire real estate folks, that's how they're doing their estate planning. So it can easily be done. And there's lots of other ways, to do it. I mean, obviously you can do DSTs and some other things that are super efficient. I think the biggest lesson to learn is no matter what, it's how much money you keep versus you earn. And anything you can do to keep that keep money as high as possible, um, as long as you're being efficient and not and a bit risk averse and careful, that's the key. You want to be able to keep it. So you want to use all of these leverages, right? Depreciation, 1031, DSTs, everything.
Yeah, I couldn't agree with you more. And on that topic too, I think this is interesting to mention. So the stepped up basis, there's proposals out there to eliminate that, right? There's also proposals to basically double the capital gains tax rate, eliminate a portion of the 1031 exchange. Some of the things we found, Kate, Trevor, I don't know for what you think, but having to buy within that 45 180 or do that equal or greater value or that equal or greater debt, right, on that new replacement property. These are all like the boxes you have to go into. But even if the stepped up basis is still around and you get a stepped up basis, the other challenge becomes the death tax. In fact, the death tax is somewhere around 40% is what the estimation is going to be for anything above and beyond, basically 12 to 14 million married, 6 to 7 million single as of 2026. And so you're looking at the largest wealth transfer in the history of the planet happening right now. And all of this wealth is tied to mostly high-end primary homes, businesses, and commercial real estate. In fact, those are 50% of all wealth in America. And these are highly appreciated. You have about 80 million baby boomers in the US alone and about 10,000 turning 65 every single day. And so my thought would be, if there were a tool to eliminate the estate tax, the death tax, right? Because a stepped up basis will not solve for that. That can change the game. In fact, we do have one. It's called the Deferred Sales Trust Plus, not to be confused with the DST Delaware Statutory Trust, which is just another form of a 1031. And this allows you to eliminate the estate tax without any charity, life insurance, or gifting required. And it's on a sale, you can eliminate it. And it also works for any asset of any kind. So instead of a Delaware statutory trust only working for investment real estate, this works for cryptocurrency, stock, business sales, primary homes, and commercial real estate. And we solve it at the root problem. I think a lot of strategies, unfortunately, Kate Trevor, they're just partial. They give you partial flexibility. They give you partial diversification, right? They give you partial, stuff, right? Meaning freedoms for your wealth. Whereas we believe the deferred sales trust gives you that more complete freedoms for your exit planning. I'm curious, had you heard of that before coming on the show?
I'm actually fascinated by it. So I'm going to have to get some information about that because that sounds super powerful. And again, everybody should be doing what they can. Everybody. This is, and there are talks that they're going to keep coming to get more. To date, it's been a pretty exclusive club. And thank goodness many of the folks in Congress are also making their money on real estate. So hopefully, it could be it could be a very destructive tax grab for sure.
Yeah, we'll see. We'll see what happens. It's the freedom for wealth in America here. We call it the reverse Tea Party, and we're in the midst of it, right? The largest wealth accumulation after 240 years from starting from the beginning 240 years ago. By the way, if you want to learn more about that, you can go to capitalgainstaxsolutions.com. You can also check out the best-selling book, Building a Capital Gains Tax Exit Plan, where we lay out exactly how to unlock your ideal wealth plan when selling highly appreciated assets of any kind for yourself or for your clients. Go to Amazon to check that out, Building a Capital Gains Tax Exit Plan, or just go to capitalgainstaxsolutions.com. We also, by the way, Kate Trevor Thompson, we just released the best 1031 exit plan, which allows you to do a regular 1031 exchange, a regular Delaware statutory trust, or the deferred sales trust, or a combination of all three, right? And that's what unlocks even more flexibility with wealth planning. What haven't I asked you so far about massive capital? Maybe you can talk a little bit about the track record if people are curious about what you guys are buying and what deals you're offering. Give us a little bit more flavor for what your guys' pipeline looks like and kind of deals that you're buying right now.
Yeah, so we're still pretty new. We're only 10 years. So as a company, we don't have any full cycle deals. But we still love what's referred to as the value add workforce multifamily housing. So that's your C and B class properties. They can be bought at a good leverage point. There's still lots of markets with lots of growth that you can increase the value of it. And the next one we're spending a fair bit of energy on is new development triple net lease retail, especially in the Texas market. So many people coming here, so all the cities are expanding, and there's just not that, I'm going to call it, the local retail center that can support the neighborhood. Amazon's not killing them. They're not the big malls. They're doing very well. And it's an interesting, it doesn't have a lot of the tax benefits and things, but we've been able to, we're growing, building them and doing them with investor capital. You can get a pretty quick return on your money. And then our goal is to start owning some of these with the triple net leases, where all the risk is passed on in theory to your tenants, and it generates some nice cash flow while appreciating.
Yeah, excellent. Okay, so triple net, new development, lease, retail. What are the tenants there for that? Okay, Trevor, what kind of tenants and what's kind of the
Yeah,
lease
so it's
terms?
all neighbor. So it's the local sushi guy that wants a place in the neighbor. Putting his second. A lot of our tenants that are going in these, it's kind of their second location in a city. We also find that normally a couple of them we've been able to get dentists and different things. There's still cell phone stores. Don't ask me why they still need stores, but it seems like a market that should never need brick and mortar, but it does. So there's still a lot of demand, and more people, especially from work from home, they want the convenience. They don't want to travel more than 10, 15 minutes to where they want to go. I know in my neighborhood here in Austin, I couldn't believe it. Like, they've built like 5 more little centers in my area, and you got to wait to get in for lunch or dinner. It's incredible how successful they are, because we've become much more micro now that we're staying at home more, and it's created a nice little niche for us.
Got it. Okay, great. All right. It sounds so new development, triple net lease, some local private, restaurants
Yeah.
and cell phones and stores and dentists. Got it. That being said, are you ready for the lightning round?
Yes, sir.
All right. So knowing what you know now, Trevor Thompson, if you could go back to your 20-year-old self, sit down with the person that you most admire, what would they tell you to help you save hundreds of hours and put thousands of more dollars in your pocket?
I would think, boy, who would I meet with? I've got to go way back to Margaret Thatcher. I'd like to meet with her, and I think focus on what's important. She was really super at focusing on a few things of importance.
Okay, excellent. Question number 2. What are you most curious about right now?
Curious about? I am curious about. Boy, you caught me off guard on the curious one. I guess AI.
What's the number one way you're using ChatGPT?
I'm not using it yet. I'm one of those old dinosaurs that kind of like, I feel like my grandma that didn't know how to work the remote control. It's kind of sad.
Hey, at our own timing, right? Our own timing. Question number 3 or 4. Number one leadership quote that you strive to live by.
Yeah. So I think it's, if you don't find a way to make money while you sleep, you'll work till you die. That one.
Love it. Next question. Number one book you've recommended or gifted the most in the past year?
Yeah. So 10X, Grant Cardone, Do It in Audible. Amazing book.
Excellent. Last question. Trevor Thompson, after all your success helping all the people you helped, what's the best way that you practice a stewardship over ownership mindset? And what's something you really believe in that you want to make a big difference in this world?
Yeah, so I believe in making communities better. So, I take great pride when we fix up a community, we do things, we do special resident events. My goal always was that people that lived in our apartments referred to it as their home. And that's a lofty goal for someone in an apartment to say it's my home. And to me, anytime I feel I do that, it's just a big win.
Trevor Thompson, it's been more than a pleasure to get to know you a little bit more here. Thank you for sharing your wisdom and expertise in a concise manner with our audience today. I want to encourage you to keep connecting with people, right? Keep impacting them to understand the power of compounding multifamily investment wealth and cash flow. Hopefully I think we're all better to make more money while we die. I mean, before we die, while we sleep. Hopefully we don't die too soon. For our listeners who want to get in touch with you, would you remind them one last time what's the best place for them to find you?
Yeah. So LinkedIn, Trevor Thompson.
Perfect. I also want to thank all of our listeners for listening to another episode of the Build to Billions podcast. As always, we really strive to help guide the successful entrepreneurs and investors on the journey from millions to billions. And we believe that the key to scaling your business and compounding your wealth and impact starts every day with a mindset of stewardship over ownership and applying billionaire principles. I want to encourage you to keep investing, compounding with passive investments with a group like a Massive Capital, and take action today. Share this with someone that could be of impact to and encouragement. And we will talk to everyone again real soon. Bye, everybody.